Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 12th of October. Starting off with the FTSE 100, which is just penetrating the 200-day moving average. That's 76.40 at the moment. We're hoping that we'll hit the February resistance line there at 77.30 and even overshoot that and hit the top of the August rising trend channel from a couple of months back. That channel top there at 78.50. On the downside, hoping for nothing lower than that rising 50-day line around 75.10. Obviously, there is the price channel floor, 74.60, but at this stage, probably the 50-day line would be the lowest we would be looking for on the downside. 78.50 the best on the upside. Moving along to the DAX, which managed to give us a bear trap gap reversal of late, and seeing it today, you can see that the markets followed through on last week's gap to the upside. 200-day line there at 15,600, which would also clear the end of September resistance, and then after that looking for it up to 15,900 over the next week or so, which is the top of that falling trend channel from back in May. Bullish divergence accompanied the gap to the upside, so quite a strong signal, and the DAX responding in kind. Moving along to the Dow, and here you can see that still struggling there at the 200-day line. That's 33,800. Above that on an end-of-day close basis, looking for the 50-day moving average, 34,400. And ideally that happens over the next week or so. At the moment, support coming in through the 33,500 area, and hopefully that will continue after what's been a decent bounce off the floor of that rising trend channel from this time last year, around 32,800. Bitcoin is next, and here you can see that we're still in that mini range. The floor of the range, really the uptrend line there from January, so that's 26,600. The top of the range, the 200-day moving average, and the 28,000 level. So really want to see this market remain above the floor of the range, and especially that uptrend line, and ideally sooner rather than later try and break 28,000 and then head up to the 30,000 area. The RSI not looking great in the sense that we've broken an uptrend line in the RSI window, so that does suggest we may have to test the 26,000 area, which was late September support for this market. Onto the stocks, and starting off with Avacta again, and here progress being made. We had our, the second target. The first target was around 136. Second target up to 164, and an end-of-day close above 164, we could be opening up the real price here, which would be a move up to that red line there, heading as high as £2.10 by the end of next month. Ideally, we stay on the right side of £1.50 ahead of any potential break through the 200 pence zone. Obviously, the last peak in February near the upper 180s. Next stock is Chill, which has had another day, another bit of good news. Here you can see that the shares have gapped up on the Amazon news. That's the second gap we've had up in the recent past. We love our gaps above the rising 50-day moving average, and we already had one of them, so that was giving us an entry point near the or below the 6 pence level. Above 5, we were looking for 8 pence, and above 8, we're looking for up to 10 pence by the end of next month. So maybe there would be a line there like that. That we will be shooting for over the near term, upside valid while we're above the 5.5 pence zone now on Chill. Looking at Capital Metals next, and here the company seeing its shares retreat from that 4 pence zone, which was the main resistance for 2023. Current position is that we're looking for support to come in at or above the now rising 200-day moving average at 2.5 pence. Above that, looking for a retest of 4 and 4.5 over the next few weeks. Next up, a stock which I don't think I've looked at before, which may be the first and last time, but we've got a sharp bear trap rebound here for Gately. We also had a gap close, so there was a gap down there from around 143. Bullish divergence line as well, so that means we're looking for the low 160s at the top of that broadening triangle from back in July. Maybe a bit more than that by the end of next month, up to the 200-day line, currently at 168. Downside at the moment, hopefully limited by 143 and that gap close area. Onto a stock which I haven't covered for a long time, but it looks as though there's a base being built here at Hotel Chocolat. Can't afford to buy the chocolate anymore, but at least I can look at the share price. Here you can see there's an uptrend or a support line there from back at the end of August. We've got the shares consolidating above a rising 50-day line that looks like we're going to have a nice breakout here above the recent resistance 133, and an end-of-day close above the top of that gap from June at 138 could be enough to unleash a move back up to £1.80. Be interesting to know what the fundamentals are associated with that, but certainly above 133 it looks as though there's a strong turnaround there with that sharply rising 50-day moving average. Ilika is next, and just the first signs of a turnaround here bouncing off a falling trend channel which has been in place since the beginning of the year, making a slight new low, so a narrow new low there below 30 pence, and then pushing higher. Initial target here up to the 200-day line at 43 pence, and then maybe by the end of next month as high as 54 pence rather, as long as we remain above the 30 pence zone on Ilika. Missed out looking at Mast Energy developments, but here's the chance now. We've got the shares still squeezed in between the 50 and 200-day lines around 1.5 pence, and that resistance line there from November last year around 2 pence. Want to see a breakout from that range, ideally to the upside, so end of day close above 2 could take the shares up to 2.75 pence, and the top of that May broadening triangle. But the key here really is that we stay above the 50 and 200-day lines, which are sandwiched together at the moment. Couldn't resist looking at Metro, and the reason for that is that we're just resting on the top of that gap down that we had, so that 48 pence. The support today 49 pence, but what we want to see is no end of day close back below 48, because then that would cancel out the prospect of a retest of the 60 pence area, and the best case scenario target up towards the upper 60s. So the key there, holding 48 pence, and obviously if you're a fan of the shares, then the point would be to be buying near 48 pence. Nice gapping action at the next stock, Sarabi Gold, and here we hit the first target there around 30 pence. Above 30 pence we were looking for as high as 38 pence at the top of that broadening triangle from February. Hopefully we'll see that by the end of this month, in fact, and given that we've had such a decent gap, in fact that's the second gap higher, unfilled gap to the upside we've had this month, so that shows or suggests that there's something going on there over and above the technical picture being so strong. Great director buying from TAP Global, and here the shares snapping that resistance line there from back in August. The line there, I suppose, to argue exactly where it is, but breaking back above 2.25 pence and bouncing off the floor of that rising trend channel means that we're looking for 3.5 pence at the 200-day line, hopefully by the end of next month, and if we're really lucky by the end of this month. On to the last two. First one is Windward, and there was an RNS today which I didn't cover, which is obviously my bad. Here we've had a gap to the upside, a nice crossing of the 50 and 200-day lines, so above the 60 pence area. Still looking for further upside here, perhaps as high as 85 pence, which is a resistance line projection from November last year, while we're above the low 60s on Windward. Just wanted to cover Warpaint, which apparently last time I looked is going great guns on the fundamental basis. On the charting basis, one can see that there's been a steady progression here, and you sort of question why you don't buy shares in companies which got charts like this and fundamentals like this and go for the blue sky stuff. But here we've got a rising trend channel here from April, top of the channel there up to £3.80, and we're looking for that by the end of next month, while we hold above the floor of the channel around the £3.10 level. That's it from me today. More updates tomorrow.